Welcome, everyone. In a world that feels full of chaos, some economies aren't just surviving, they're actually thriving. Today, we're going to break down a really important speech by the RBI's deputy governor to figure out why. We'll pull out all the key concepts and data you're going to need for your exams. So here's our game plan. We'll kick things off with this global resilience puzzle, then we'll jump back in time to the crisis decade that honestly changed everything. We'll unpack the new policy playbook that came out of it, see how India used that playbook to write its own success story, and then we'll look at the new challenges waiting just around the corner. Let's get into it. Okay, so let's start with a really big contradiction that has economists and world leaders scratching their heads right now. This is the million-dollar question, right? With all the global chaos that's become the new normal, you'd totally expect these economies to be on shaky ground. And yet, many emerging markets, or EMs as we call them, are holding up surprisingly well. So what's their secret? And this is where the puzzle really comes into focus. At the recent big IMF meetings, it was like a split-screen reality. On one side, you had everyone talking about this crazy, unprecedented level of global uncertainty. But on the other side, people were amazed at how resilient many economies have been. So how can both of these things be true at the same time? Let's figure it out. To really get the answer, we've got to go back in time. The reasons for today's stability were actually forged in the fire of a really tough period, the 1990s, the crisis decade. All right, let's lock in a term that's absolutely crucial for your exams. Original sin. This was a massive weakness for emerging markets. Picture this. Your country needs to borrow money, but nobody will lend to you in your own currency. You're forced to borrow in, say, US dollars. Now, what happens if your local currency weakens? Suddenly, the amount of debt you have to repay just explodes. It's a complete recipe for disaster. And that risk of original sin often led to this nightmare scenario, the twin crises. This is just a devastating downward spiral. A currency crisis hits, which then crushes all the banks that borrowed in that foreign money. But then, the banking crisis makes the currency crisis even worse. They literally feed off each other, leading to a total economic meltdown. And this timeline, it just shows the devastating domino effect. The 90s weren't just a few isolated incidents. The crisis that kicked off in Mexico in '94 spread like wildfire, igniting the huge Asian financial crisis, and then engulfing giants like Russia and Brazil. One after another, these economies were just pulled under. But out of the ashes of all those crises came a complete revolution in economic thinking. The painful lessons of the 90s forced emerging markets to rip up the old rules and write a brand new policy playbook. I mean, just look at the difference here. This slide shows a complete 180. On the left, you've got the old, fragile way of doing things, rigid policies, kinda reckless spending, weak institutions. And on the right, the new playbook for resilience, flexibility, fiscal discipline, and strong rule-based institutions. It was a total game changer. Now, I know that's a lot to remember, so for your exams, we've created a handy mnemonic to help you lock in these reforms. Just remember fresh FIM. Think of it like emerging markets getting a fresh start with their financial and inflation management. So let's break it down. FRESH stands for flexible exchange rates, building up foreign exchange reserves, cautious external debt management, strengthened banks, and creating fiscal headroom. And FIM stands for flexible inflation targeting and monetary policy independence. These 6 shifts, they really became the bedrock of this modern EM resilience. All right, so that's the theory. How has India actually applied this new playbook? Well, the data tells a really powerful story of how India became a textbook example of this new resilience. This first number is so important. India's external debt is just 18.9% of its GDP. Remember we talked about original sin? Well, this low number shows you exactly how India has managed to avoid that trap, and that's a key pillar of its economic stability. Now, let's talk growth, a massive 7.8% in the first quarter. I mean, while a lot of major economies are slowing down, this figure just shows India's powerful domestic momentum. It's a real global bright spot. And this chart, this shows the power of another one of those key reforms. Remember the FIM from our fresh FIM mnemonic? This is it in action. Since India adopted flexible inflation targeting back in 2016, it has successfully wrestled inflation all the way down from 6.7% to a projected 1.5%. That's a huge win for stability. But achieving stability isn't the end of the story. It's really just the foundation. Now, emerging markets, India included, face a whole new set of challenges that all boil down to one question. Where is the future growth going to come from? In this chart, it reveals the new reality perfectly. For decades, the path to getting rich for EMs was simple. Just plug into global trade. But that engine has pretty much stalled. The ratio of world trade to GDP peaked way back in 2008 at 61%, and it's basically gone nowhere since. Countries just can't rely on it for easy growth anymore. So, you see, the whole game has changed. It's not just about preventing crises anymore. Now, it's about finding new, domestic drivers of growth, creating quality jobs in a world of rising protectionism, and tackling tough issues like underemployment and high debt. It's a whole new ballgame. Okay, let's pull all of this together. This is the big one. Here are the key takeaways you absolutely need for your exams. You might want to get ready to screenshot this slide for your revision notes. Here it is, the whole story on one slide. We went from the dangerous original sin and twin crises of the 90s to the revolutionary fresh FIM policy reforms that built resilience, to India's standout performance with its low debt, high growth, and tamed inflation, and finally to the new global challenge of finding growth now that the trade boom is over. This is your complete summary. And that brings us to the final crucial question. The foundation of stability? It's been built. The mission has now shifted from just resilience to acceleration. So what's the one key reform that will unlock India's next decade of growth and let it finally make that leap from an emerging to an emerged market? Well, that is the challenge for India's next generation of leaders. Thanks so much for joining us.